Okay, great. Alright, so let's begin the presentation again. Sorry, I thought you guys could see it. Okay, great. Okay, so it's all about trading here at InfinMarkets. Let's begin with some of our unique features. As I previously mentioned, you can begin with $1. We have multiple platforms, including our own proprietary platform called NetTradeX, which a lot of traders are starting to prefer over MT4. But you can continue to use MT4 if that's your platform of choice. We always have news and sources up there to help our traders. Personal service in terms of online chat, account service managers, and dealing room support. Transparent costs, such as our spreads are fixed, and your funds are kept in a segregated account, so you don't have to worry about ever losing your money. We're all registered here in Cyprus with CySec, so your money is safe. So, who we are? Well, there's over 100 employees here at InfinMarkets with all different nationalities. Any language that you choose to register in, I'm sure you'll find the support in your native tongue. Like I said, we're innovators in online retail currency by making our own proprietary platform. We always have support 24 hours a day, 7 days a week. Again, multilingual, and we're licensed and regulated, so everything is safe when you start trading with us. So, let's begin to hear what you need to be a successful trader. Is it charts or spreads? Is it the entry and exit price? Is it having a plan or strategy before trading? Or is it dealing with the roller coaster of emotions? The actual answer is smart money management. As you can see, money management is what separates successful traders from unsuccessful ones. When you're trading with leverage, you have to be really well organized and practice good money management. I can't stress this enough, guys. Money management is important. And especially if you're a beginner, you have to be able to endure numerous losses and be careful with it though. The point is not making those losses cost too much. Remember, if you're a beginner, Forex moves fast and markets are very volatile. You have to be careful. But using good money management principles will make sure that you're a successful trader. So, always keep this in mind. Most profitable traders will readily admit that they have more losing trades in a year than successful ones. So what makes them profitable? Well, the main reason for the profitability is when they get a failed trade, they only lose a small part of their capital. When they're correct, they make more than enough to cover their losses. This is a major principle you guys have to keep in mind when you're trading. I can't stress this enough. You have to limit your losses and try to increase your profit as much, because nobody will ever admit to saying that every single trade they've taken was successful. All traders make bad trades. So, these are the principles you guys should really keep in mind. Okay, take a look at the screen. Make sure if you need to write them down, or leave us your emails, and if you want, we can send you the presentation. But these are the principles you have to keep in mind. Okay. Depending on the size of your trading account, risk must be assessed accordingly. A large amount of traders don't risk more than 3 to 5% of their funds on any single trade. You have to make sure to use stop loss orders. This is what I mean by limiting losses. Never add to losing positions, no matter how tempting it can be. I've seen a lot of traders, and when I started out by myself, once the market started going against me, I'd add more money and I'd order more money to support the position. But at one point, it's just going to lose control and you risk losing everything. So you have to learn to cut losses. And always try to employ a 2-to-1 risk-reward ratio. In other words, if you risk 500, your goal should be to try to make 1,000. Okay, but these are the 4 main principles. Has everybody got this? I've also discovered some more principles that I want you guys to write down as well. The one important one is not over trading. Okay, if you over trade, it means you're taking too many positions at a time, and this increases your exposure to the market. It can also mean that trying to chase pips all over the market by placing too many trades in a day, especially after losing 2-3 positions. And then people start over trading, taking more positions to take what they've lost already, and that just gets you into more and more trouble. So you have to assess yourself based on your account how much you'd like to trade a day, and do not overdo it. The more positions you take, the more exposure you have. Okay, one thing that I've heard other Forex companies and other traders tell their beginners is that they should focus on pips and not the money. Personally, I don't agree with this. Okay, you have to keep in mind the money, the way it's fluctuating in your account. Basically what they're saying is that to focus on the pips instead of the money is that you concentrate on the pips instead of the dollar, and somehow you don't become emotionally, or it doesn't bother you just by watching the pips. But I guess this applies to guys who have millions in their account and they don't care about the fluctuations. But for me personally, I could never look at it like this way. And if you believe that this works, more than likely you're going to end up losing more money than you should. So try to avoid thinking about it just as in pips. Okay? Another thing that I've heard is that wider stops risk more money than smaller stops. Honestly, I don't agree with this either. Because if you have a bigger stop loss set in place, then more than likely you'll be able to overcome all the fluctuations in the market. Because especially now, in the past 2-3 weeks, if any of you have noticed, the euro's been going up and down like crazy. If you have a tight stop loss, more than likely it would have gotten stopped out no matter what. Whereas if you had a bigger stop loss of, say, 200-300 pips, again, this is according to your account, you would have been able to survive these fluctuations. So having a wider stop loss necessarily isn't bad. However, it has to be within reason based on your account. Okay. One other principle that you should always use is trailing stops. Now that's when you set a stop loss after you come into profit. And like I said, because of the fluctuations in the market, you can be up half the day and then down the rest of the day. By using a trailing stop, you actually get a chance to secure some profits, and most platforms offer this now in any case. And the last principle I can tell you guys is do not be greedy. I don't know if any of you have seen Wall Street, but Gordon Gekko used to say greed is good. Do not get greedy when it comes to Forex trading. Once you set your profit and you hit it, take it, and just close the position. The more you try to gain after you've made your initial goal, then more than likely you're going to get stopped out due to the fluctuations. Because remember guys, when it comes to Forex, it can change so quickly, so fast because of what one politician or one minister says. You don't want to expose yourself to these fluctuations. If you hit your profit target, take it, and then look for a new position. Okay. So keep these tips in mind when you guys are trading. So let's see what some of the successful traders say. Okay. Risk comes from not knowing what you are doing. In other words, Warren Buffett, there's a reason he's been one of the richest men in the world for years. He doesn't take unnecessary risks. So if you're doing an analysis on a certain currency like the euro dollar or the dollar Swiss or the dollar yen, and you know that market well or that currency, focus on that. Don't try to take something crazy, I don't know, like say the South African rand. If you don't know the market or you're not in touch with what's going on in the political situation over there, be very careful of the trades you take. Make your analysis and take trades that you know the market well. Okay, George Soros, the guy who bankrupted the Bank of England. It's not whether you are right or wrong that is important, but how much money you make when you are right and how much money you lose when you are wrong. Again, this is one of the main principles that I said at the beginning. Make sure you make enough money to cover the losses, because no trader can make a successful trade every single time. But when you're right, you have to make sure you're really right. Okay. And the last guy, Marty Schwartz, he's a very famous hedge fund manager in New York and handles billions of dollars with his hedge fund. I'm more concerned about controlling the downside. Learn to take the losses. The most important thing about making money is not to let your losses get out of hand. Okay, so again, everybody makes bad trades. The point is limiting that loss, not adding to losing positions. Like I said, this is what he means by getting your losses getting out of hand. So if you have a bad trade, just cut it off and try to take another position to make it back, but be careful with it. There's a saying that says, cut your losses, your profits run. Okay, but within reason again, especially when it comes to Forex. And these are some other words always to keep in mind. When in doubt, stay out. The trend is your friend. So the first one, if you're not sure about a trade, if you're not feeling it, then do not take it. Don't take it just because you should. Make sure you're informed and you know what you're doing with regards to your trade. The trend is your friend means basically look at the market, do your analysis. We have all the available information on our websites. Okay? We're here to help as well if you don't understand what we mean by trend, but basically most of you probably understand. If the market is going up, you should be buying, not selling. If the market is starting to reverse and starting to go down, then you should look to short. Okay? Better to lose your opinion and not your money. So this kind of ties into the first one. When in doubt, stay out. If you're not sure, but you said, oh, I could have made this much money, but you might have been wrong. So better to make a mistake theoretically than to lose your money. Okay? If you manage the risk, the profits will take care of themselves. So if you take informed, good, analyzed trades, then more than likely when you do take the bad trades, the good ones will compensate for the lost ones. Okay? And this one is the most important. John Maynard Keynes, one of the great economists of our time. The market can remain irrational longer than you can remain solvent. If you ask any experienced trader, he'll tell you this is absolutely true. Basically what it means is if you do a technical analysis and you look at everything and everything is pointing to the direction that it should reverse or should come back into your favor, more than likely the market will continue to do what you don't expect it to do, and this is what causes a lot of people a lot of money. Okay, so you guys have to keep these stuff in mind. I know this is just our first webinar. We'll be also hosting some more if you guys like this one. Okay, if you have any further questions, don't hesitate to contact us in terms of your account. And I think we'll start switching over to some questions from you guys now.